Testing, testing. Hey, can you guys hear me? All right, you guys should be able to hear me, right? Hey, Lawrence, I see you over there. All right. All right, we're gonna begin today's webinar. It's a pretty straightforward webinar. It's not as exciting, right? It's not exciting, but it's actually pretty important. It contains pretty important knowledge on how to use fundamental analysis when it comes to trading, because using fundamental analysis, sometimes people get too caught up reading, right? People get too caught up learning fundamental analysis, right? Reading about the news, and there's actually a time to do that, and there's a time to not do that when it comes to using fundamental analysis. All right, so I want to take this session. All right, I want to take this session to kind of just explain to you guys, right? And if you have any questions, feel free to send them through. This webinar is recorded, right? Of course, as part of the bigger IronFX Academy, right? That we are. It's our goal here to kind of educate you guys on not only technical analysis, but also fundamental analysis. All right. So let's begin today's session. There is a chat section, a chat button which you can click on to just send your questions through. Right. I want to encourage you guys to do that anytime you can. Right. So any question you have, just send it through. I'll do my best to answer them along the way. Right. But I'm going to give you an institutional trader's perspective behind fundamental analysis, right? And how you can use it effectively in trading. Okay. Now, some things for you guys to take note of, right? The risk disclaimer is that this webinar is purely educational in nature. So nothing in this webinar should be construed as investment or trading advice. Please do your own little due diligence before you guys trade. All right. Now let's begin today's session. Okay. Now, for those of you guys who are here for the first time, just a quick introduction to myself. My name is Desmond Leong, right? I run the award-winning research firm Everest Fortune Group, and also finalist for the 2019, 2020, 2021 Best FX Research and Best Equity Research, right? So we're a strong team of traders over here, right? I run my sound is breaking. Is it from my end? I'm not sure if it's from your end, Lawrence. Benjamin or anyone else, right? Are you guys able to hear me clearly? Not sure if you guys can hear me clearly. I can do a quick mic test. Just let me do a quick mic test. Testing. Oh, select speaker. Testing 1, 2, 3. Testing. Testing 1, 2, 3. Yeah, Lawrence, I think it could be on your end, because I've just tested it with Zoom. It seems like it's working properly, right? So do check it out. I'm not sure if it's maybe the speaker or something, right? But yeah, the sound is working properly, right? Do check it out, and if you have any I can hear you. The sound comes and goes, right? Try to relog in again, right? See if it helps, right? I think it should be, is your sound working for like YouTube videos and stuff? If it's not working, maybe you can try play a YouTube video. If it works, then it could be this mic over here. But I've just tested it on Zoom. It seems to be working properly, right? So I'm just going to continue bit by bit. All right. So yeah, guys, this is a quick introduction about myself, right? If there's anything, Lawrence, I don't think you can get it. You might be able to get it in your email, but you'll also be able to get it if you go to, I'm going to click a link here, IronFX YouTube, all right? I can send a link here for you guys to take a quick look under playlists, right? You want to look for this playlist called IronFX webinar series, right? For beginners. This is a link that you guys want to go to. Watch all the previous webinars that we did, Technical Analysis 101, right? Live trading sessions, go check it out. All right. Now, let's begin today's session. I'm going to go on really quickly with it. All right. So some of the things that you need to take note of, right? In what we're going to cover today, we're going to cover really quickly, what is fundamental analysis, using the economic calendar, right? Then we're going to look at known unknowns, right? It's an interesting concept. Right? It's basically, it teaches you what are the news events. You know it's coming, but it's an unknown outcome, right? Then we look at time versus price sensitivity matrix, followed by macroeconomic analysis and the VIP room, which I should be releasing to you guys either today or tomorrow, right? We finally got it ready, right? It's a pretty nice, great place to kind of go in and ask us questions. All right. Now let's begin today's session, right? So what exactly is fundamental analysis, right? So fundamental analysis, think about it as like you are doing a health checkup, right? Think about it like you're doing a health checkup, right? In most circumstances, you go to a doctor, he does a health checkup, he monitors your blood pressure, he monitors your cholesterol level, monitors a few of these things, right? And from there, right, you can more or less get the gauge of your health. Are you healthy? What's your blood pressure, right? Are you have good cholesterol level, right? Your liver enzymes, you got all these different things that, can use to have a good gauge whether how your health is doing, right? Fundamental analysis is very similar to that, but fundamental analysis is like you're taking the health of the country, right? You're taking the health of the economy, right? You're going to take what's the inflation numbers, what's the GDP, what's the growth, just measuring these few little different key metrics. And then from there, you can tell more or less the health of the economy, right? If the health is good, that means, you can expect the currency to strengthen, right? If the health is weak, that's where you can expect the currency to weaken, right? So that is the case when it comes to fundamental analysis, right? Don't let the words scare you off, or it doesn't sound that complicated, right? It essentially what it does is it just allows you to monitor the health of the economy. Okay, now moving on from here, right? One of the places that you want to take a look at, right, to get the readings about whether it's the inflation, the GDP, the interest rates, right? All these different numbers, right? You're gonna wonder, where do I get them from? You actually get it from the economic calendar, right? There are many different kind of economic calendars out there, but you can see, right, on IronFX, when you go to IronFX, there is this page where you can go to economic calendar, right? And it actually shows you, right, what are the key news events coming up, right? You got the recent one, you got today's economic news, you got tomorrow's economic news, right? But let's just look at today's economic news calendar, right? The numbers, the key news events that you usually want to watch out for, right, are those that has a high impact news, right? High impact news events, hey, welcome back, Lawrence. I hope you can hear me better. Right? High impact news events are like, they move the currency a lot more, right? They move the currency a lot more, in this case, let's just look, like last week, there was a high impact news event for non-farm payroll, right? And that, we have moved the currency a lot, right? So this is where, you kind of want to keep a watch out for it, right? So let's look at it. Maybe let's look at for those tomorrow, right? Tomorrow, you can see that we have for China, we have the interest rate decision, right? We can scroll down and we can see all the different stuff, right? Canada has its unemployment rate, right? So, yep, this is one of the things we'll be talking about later, right? The consensus and the previous one. So everyone is expecting it to be 5.2%. What moves the market is when the actual result is different from the consensus, right? So let's take like non-farm payroll for tomorrow too, right? It's a big news event coming up tomorrow. So we look at it, right? We see just let me scroll down a little bit more. Right? Oh, maybe it's in the non-farm payroll. Yes, non-farm payroll tomorrow, or is it? Let me just check. Right, I'm just trying to find where's the button? Yeah. Oh yes, today. Today, right? I want to show you the difference between like a high impact news event or medium impact news event. You notice that this, I know you can't see it over here, but I'm going to scroll all the way up to here. This is the actual, actual, consensus, and previous, right? What moves the market is if the actual value is different from the consensus, right? Not so much of the previous, kind of only comparing the actual and consensus, right? Because if something is different from the actual, from the consensus, that's where it kind of moves a little bit more. Okay, so these are more or less the values you want to look at, but it looks a little bit daunting. There's so much stuff. There's balance of trade, there's interest rate year on year, right? Month on month, non-farm payrolls, quarter on quarter, right? There's a lot of stuff here. But the problem is that it's more, you think about it as this concept, which I want to explain to you. And it is called, let me find it. It's called known unknowns, right? So you're going to ask the question like, what are known unknowns? Known unknowns are basically, it's coming, but it's an unknown outcome. Okay, let me repeat that once again. It's coming, but it's an unknown outcome. For example, non-farm payroll is coming, it's an unknown outcome, right? As you can see in all this over here, right? Let's just say we got a high impact news event here. ECB interest rate decision, it's coming, but it's an unknown outcome, right? And the more you see this, right, this is where it affects your trading strategy, right? Because if you know it's coming and you do not know the outcome, that means you are leaving yourself to a very big volatility or unpredictability that might happen there. You could be right on your trading strategy, right? You could be right on your trading strategy is going exactly in the direction you expect it to, right? But suddenly, out of nowhere, right, this crazy news event comes in, and it just wipes out all your profits, right? So it's this is an important concept that you need to know, right? When it comes to fundamental analysis, especially trading the economic news, the economic calendar, there's a lot of these things called known unknowns, right? So how do we handle it? Let me share it with you in this next slide, right? This is based on what my team created as the time times price sensitivity matrix. Let me just explain really quickly what it is. So for example, on the top here, we've got technical analysis, we got economic releases, and we got fundamental analysis, right? On the left here, we've got 3 different trading styles. We got scalping, we got day trading, and we got swing trading. Let me just see if I can draw. Just draw using a little thing here. Yeah, we got we got scalping, we got day trading, and we got swing trading over here, right? So how this actually affects the the known unknowns, right? How is this affected, right? So if you're a scalper, your reliance on technical analysis, let's go one by one. Your reliance on technical analysis is really high, right? Your reliance on economic news releases is very high because of the impact, right? As a scalper, your stop loss and take profit placements are probably very, very tight. Maybe you're talking about 5 pips, 10 pips, right? Very, very tight, right? And because of that, you must be very aware about the economic news releases, right? In the economic calendar, right? Imagine taking a trade right before non-farm payroll. You might be right, but because of the volatility, how crazy it goes, you might get wiped out. Okay, so that's very important when it comes to economic news releases. In terms of fundamental analysis, right? Fundamental analysis, it actually has a pretty low reliance. What does that mean, right? That actually means that if you are scalping, let's just say you're scalping gold, right? You're trying to take a small scalping trade, maybe 5 minutes, right? Or maybe like 10 or 20 pips on gold, right? Your long-term view on where gold is going to go by the end of the year is not relevant, right? Imagine you have this super long-term view that the world is where in this 2023 is going to be a bearish year for gold because of all this uncertainty, the interest rate hikes, all these things that are going to get people rushing to the safe haven. You are bearish on gold on the long term, right? For next 2 quarters, right? Next 6 months, you're bearish on gold. That view is not going to affect your scalping trade. That view is not going to affect your trade over the next 10 minutes when you're scalping. Okay. So then we go into day trading. Day trading also has a high reliance on technical analysis, right? It also has a high reliance on economic releases because, in a day trade, your stop loss and take profit placements are, probably not that big, bigger than scalping, but not super massive. You're looking to try to get out of the trade within the day, right? So you do have is high to medium impact economic news releases do impact it on a medium to high basis, right? And you do have a little bit of a reliance. You have a medium reliance on fundamental analysis. Okay, you have a medium a reliance on fundamental analysis. That means you roughly, it's kind of important to know like what is going to happen for the day, right? What is going to happen for the day, right? And you know, it's not that strong. Risk on, risk off, these are things that, you know, can be very useful for you when you're taking these trades. But yeah, it's something to watch out for when you are day trading. I'll be showing you how you can use fundamental analysis along with technical analysis very effectively later. Okay. And lastly, you know, we have, you know, if you're a swing trader, you have a medium reliance on technical analysis, right? So, you know, technical analysis is important, but you don't need to go crazy about, you know, technical analysis, right? If you're a swing trader and if you're a position trader, right? Technical analysis is important, but it's not that great. Economic news releases are rather low impact, right? Economic news releases are rather low impact, meaning that, just give me a second, right? Meaning that it is, I can show you a chart later, right? I can show you a chart later how, let me see if I have it here for you guys, right? Probably not yet. I can show you how a big news event like a non-farm payroll, a super big news event looks really, really big on the 5-minute chart or the 15-minute chart. But if you go into like swing trading where you're looking at like 4-hour charts or you're looking at like 1-day charts, you know, it looks super tiny, right? So for swing trading, economic news releases are not that important, but what is really, really important is the fundamental analysis, right? Your long-term view on where gold is heading, oil is heading, right? Over the next 1 month, over the next 1 week. This is very important when it comes to swing trading, right? So when it comes to fundamental analysis, right, what I want to tell you is that what we're learning today, right, is depending on your trading strategy, right? Depending on your trading strategy, you know, you don't need to be that crazy over it, right? If you're a long-term trader, if you're a swing trader and position trader, yes, you have a high reliance on fundamental analysis. Day trading, you have a medium reliance, but if you're a scalper, right? If you're a scalper, fundamental analysis is not so, it's not going to affect your trading that much. Instead, you should be focusing more on the economic news releases, right? The big economic news release events, right? Because that kind of volatility can really, really affect your trades. Okay, you might be right, you know, in the right direction, but because of the crazy volatility, it kind of weaks you out, right? So these are important things to consider, right? These are important things to consider when it comes to how much you can or you should apply fundamental analysis into your trading. Okay. Now, moving on from here, let me just move on to the next slide. Again, guys, if you have questions, I recommend you guys to ask it right away, right? Ask it right away. I'll do my best to answer the questions along the way, right? So, for example, this is scalping, right? And this is my main trading strategy. I'm a scalper, right? I go in really quick and in and out fast. My hit rate's about 70 to 80%, right? Risk to reward about 1:1 to 1:1.5, right? So my trading style is scalping, right? It might look a little bit crazy to you guys over here, but you can see over here how I have, let me just pick up my drawing tool, right? I've identified all these levels here as a key support level, right? So I'm looking to play the quick bounce over here, right? So this is scalping, right? I'm even using the 1-hour chart on it, okay? So this is scalping. And what happens is that, let me press escape. How do I clear and mouse? Okay, yeah. So what happens from here, as you can see how price comes down, touch the entry level we just identified, bounce up really nicely and hit our take profit, right? I'm going to zoom in here. This was exactly how it looks like, right? This was how it touched here and it went here. Now look at this trade, right? Just look at this trade over here, right? You notice that price just touched this level. Oops, just let me get bigger. Yeah, price just touched this level, right? And then it bounced up to our take profit. Our take profit is right over here, right? It's a super duper small trade, right? 1, 2, 3, 4, maybe 4 bars and you have hit your profit target, right? This move in that 4 hours that pass, I don't need to know what's going to happen to the Kiwi dollar and the yen, Japanese yen? Do I need to know what is the Bank of Japan interest rate decision over the next, how it's going to affect the rest of the year, rest of the quarter? No, I do not need to know. I just have a super high reliance on technical analysis in this case, right? Super high reliance on technical analysis to call these bounds. So that's an important thing to take note of if you are scalping, right? If you are scalping, you don't need to go that crazy into fundamental analysis, but you do need to know you do need to know your technical analysis very well. Okay, I repeat that again. If you're scalping, fundamental analysis is not super important, but technical analysis is. Right, I'll be showing you how you can apply fundamental analysis with technical analysis for day and swing trading in a bit. Okay, now let me just move on from here to the next thing. Right, of course we can see, this was the exact trade we took on Kiwi Yen, right? Two really, really quick scalping setups and made some good money from there, right? But this is exactly how it looks like. Okay, scalping, you just get in, right? The time you get in and time you get out is super fast. 6:05 over here, 9:21, so 3 hours and 16 minutes. Okay. Now, moving on from here, what is macroeconomic analysis, right? Macroeconomic analysis basically is measuring, there are 4 things that you need to measure. Okay, 4 things that I need to measure. I'll go through this quite quickly, right? I'll go through this quite quickly for one reason, because I feel that you can learn this, right? You can learn this yourself outside, right? But I just want to highlight it to you, right? I just want to highlight it to you on what are the 4 things you should focus on when it comes to macroeconomic analysis. Okay, it basically is looking at a few key figures, right? It's looking at a few key figures in your, what's the word for it? Of a country's health, right? Let's just take a quick look at this, right? The first one is interest rates. Okay, the first one is interest rates over here, right? Just give me a second, right? So the interest rate, let me just move this so that you guys can see, right? Yeah, the interest rate is basically a cost of borrowing money, either by individuals, companies, or even governments, right? So you heard of the recent Fed increasing the interest rate. So it is more expensive for people to borrow money, right? So how does that affect? If you increase the interest rate, right, people and companies borrow less, right? Now follow my logic here. They borrow less, they have less money to invest and to spend, but if you reduce the interest rate, right, suddenly these people, it's so cheap to borrow money. I can go anywhere. I can just borrow money. I can use it to spend. I can use it to invest. That's great, right? So this is how interest rate works. Okay, if it goes up, borrowing goes down. If it goes down, borrowing goes up, right? So how does that affect growth? Interest rate go up. This means that what people are going to do, right, because it's more expensive to borrow money, right? Let me see if I can just use my drawing tool over here, right? So if interest rates go up, right, what happens to savings, right? You got savings over here. Savings, right? Savings would go up because more people are going to start saving money, okay? And hence your spending, right? Spending decreases. Spending decreases, right? And this would lead to growth. Right, so you can see how it all is. I'm drawing it out here for you, but what you can do is you can understand the logic behind it. Okay, your interest rates go up over here because it's suddenly so expensive. People are like, hey, let's start to save a little bit more money. They save more money, right? When they save more money, what happens? Their spending goes down. When the whole country is spending less, the growth goes down. Okay, the opposite is true. When you decrease interest rate and it is cheaper, right? It is cheaper. People are going to borrow more, right? People are going to borrow more, and so basically they're saving less, right? They're going to spend more, right? And then their growth is going to increase, right? So who decides these interest rates? Is that the central banks meet every month to set these interest rate levels, right? So that they know how to stimulate the economy. Okay, now let me explain really quickly how this affects 3 areas, right? The currency market, the stock market, and the commodities. Okay, if we're talking about currency, right, like the US dollar, euro, if a country increases the interest rate, what happens is that it attracts foreign investment. This increases the demand for and the value of the home country's currency. Okay, now stocks will drop. right? Because stocks and interest rate are negatively correlated. Higher interest rate implies that cost of borrowing, for these firms will increase, and it has a negative effect on stocks. Now, if you think about it, what happened recently? I mean, not so recently, right? We have the Fed. The Fed recently increased the interest rate. When they increased the interest rate, what happened to the stock market? What happened to Netflix? What happened to Amazon? Right? They all took a massive beating, right? Their stock prices dropped. Why did their stock prices drop? It's because these companies, they rely on these high growth companies, right? They rely on borrowing a lot of money, right, to spend to facilitate their growth. If interest rate was 0%, they'll borrow everything, right? Borrow so much just to spend. Right? Suddenly, right, because they're borrowing such a huge amount, when the interest rate goes up, they're like, whoa, man, that is expensive. That's now pretty expensive to me, right? And that's the problem. And that's how interest rate, if it increases, that it causes the stocks, right, especially high growth stocks to drop. Right. And then, of course, the interest rate increase, your commodities will drop too, because, these companies, right, they require a lot of gold, oil, right? They stop production, right? And commodities will drop too. Now, going to the next one here. Okay. Now I'm going to talk about inflation. Let me just erase my drawings. Okay, all my drawings over here. Okay, let's talk about inflation. Inflation is the increase in the prices of goods and services in the economy, right? Just to put things into perspective, right? When inflation increases, more money is needed to purchase the same goods, resulting in decrease in growth. Now, what does it mean? Let's think about it, right? I'm not sure, we're all coming from different countries, right? I think some of you guys from South Africa, some of you guys from UK, from England, right? What was the price of a McDonald's, a Big Mac, right? What did it cost maybe 20 years ago, right? Maybe a Big Mac, right, cost $2 20 years ago, but now it costs $6, right? So that is, in the simplest terms, that is inflation, right? So as inflation keeps going up, this actually reduces growth. There are two main data that we look at, right? I'm going to write it out for you over here. There are two main data we use to measure inflation. One is CPI. CPI is actually this thing called Consumer Price Index. As the word suggests, C is consumer, right? It's for us consumers, right? So it measures the inflation by measuring the changes in the price of a basket of goods, market basket of goods, right? Stuff that we consumers buy. Then there's the other one, PPI, right? You notice that the last two words are usually the same, PI, price index. PPI is the producer price index, right? So it measures inflation through the change in the production prices of goods and services. Right. So now these are the two things that you normally look out for. You go to any economic calendar, you can see CPI there, you can see PPI over there, right? That if you're looking for inflation, you're looking to measure inflation, right? That is the numbers that you want to look at. Now, sure, now that we roughly know what to look out for to give us an indication if inflation is going up or down, right? What we then want to do is to know how to apply this knowledge to trading. How does inflation affect the economy, right? So inflation affects the economy directly, as high inflation rates prompt the central bank to increase interest rates. Okay, now let me see if I got a quick explanation for you over here. Okay, central banks use interest rates to control inflation. Okay, remember what our previous this thing over here, interest rates. Right. So remember, the central banks are the one controlling these interest rates. Okay. They use this tool to fight inflation. Okay. Because if there's higher inflation, it means that the currency will strengthen. Right. When inflation increases, central bank tend to increase interest rates. And this causes an increase in the value of the currency. Let me just draw it out real quickly for you guys over here. Right. So if there is high inflation, what happens is that the currency, this actually causes the central banks, right? The central banks, right? They will increase interest rates, right? So this is interest rates. They'll increase interest rates. And what happens when you increase interest rates, right? You increase the value of the currency. So the opposite is true. So what happens, right, is remember, when we increase interest rates, who were the people who suffered really badly? It was the stock market, right? Suddenly they're like, oh man, it's so expensive to borrow money, right? So the stock market, right? The stock market will drop. All right, stock market, especially the high growth ones, it tends to drop, right? And then, of course, the commodities would tend to strengthen, right? So this is something you need to take note of when inflation, especially when inflation is increasing, right? You notice that it affects one another. Inflation increase, leading to the central banks, right, to increase interest rate. Increasing interest rate causes the currency to strengthen, right? And then it causes the stocks to weaken, right? So it's all kind of related one way or another. Okay. Now, I'll be showing you how I applied all this in forecasting. I think the China yuan, right? S&P, right? Which was actually some of the calls that won us our awards, right? I'll be showing you how we do it later, right? But I just need to touch on two more things. One is growth, right? So growth measures the health of the economy, through the increase in, goods and services produced, right? The key thing that you want to look out for here, right? How do you look at growth, right? GDP, man, gross domestic produce or product, right? This measures the value of all goods and services produced within a country. Okay, this measures the value of all goods and services produced within a country. A few of the other things that we also look for, right? First is the international trade balance. International trade balance, right? This measures the difference between imports and exports, right? And then the last one is that we have the retail sales, which measures the growth through consumer expenditure. And it's more or less used to assess the direction of the economy, because more people are spending means it's better, right? So actually, economic growth is one of the most watched indicators, because it enables increased living standards, improve tax revenues, it helps create new jobs, right? And all of it actually improves. Okay. Now, I don't want to dive too deep into this, right? I don't want to dive too deep into this because it can be quite dry, right? Looking at these few things over here. The last thing that we want to look for is unemployment, right? Non-farm payroll. These are things that people look out for, right? So it's actually one of the biggest things that people look out for, unemployment, right? It basically, yes, it looks at a job market, right? Because if your economy is healthy, right, that means there's availability of well-paid jobs, right? There are a lot less people are unemployed, right? So this unemployment figure is super duper important that you need to take note of. In super simple terms, right? Right? If unemployment increases, right, are consumers going to spend more or spend less? If you think about it, unemployment increases, right? So non-farm payroll is, I look at the numbers that, oh man, we got a high unemployment number. How does this affect your trading, right? How does this affect the trading, right? High unemployment means that people are going to hold back on spending. That means that, oh man, economy is not so safe, right? If it was super safe, remember the time when COVID happened, right? People were losing jobs left, right, and center, right? Companies were cutting back. They're like, oh man, we suddenly, there's so much uncertainty in the markets, because of the lockdowns, they needed to let people go, right? They needed to fire a lot of people. So unemployment shot up. When unemployment increases, are you going to be spending more money? Are you going to be spending less money? Right? You're going to be spending less money because you're like, oh man, I don't even know if my company is going to close down, right? Next week or next month, right? I'm looking, there's suddenly, the economy feels very unstable, right? Just think about back to the COVID days, right? When everything is just so unstable, right? When you're just so worried about unemployment, right? So when there's high unemployment, your consumer spending goes down, and this, you use less money, right? And hence, growth goes down, right? And then, of course, the currency weakens. Okay, so that is don't try to draw out a whole a whole diagram here on how it affects one another. Think about it from a logical perspective, right? As long as you understand, right? High unemployment is never good, right? High inflation is never good, right? Just think about it from that perspective. Then you more or less know how it's going to affect the currency and the markets. Okay. Now I'm going to show you, right? I'm going to show you really quickly over here, right? How we actually use this to forecast. So this was the what's the word for it? This was some of the examples, right? where we forecasted this. I think it was back in 2020, right? Towards the end of 2020, right, when it was the presidential election. So it's all recorded, all live, right? And I was forecasting, right? I was forecasting dollar CNH. CNH is the China yuan, all right? And of course, let me just show you how I use technicals and fundamentals to forecast. If you know how to combine these two things, you can be a very good trader. Some things I'm gonna highlight to you over here. Firstly, right, we are looking at the 1-day chart. We're not looking at the 1-hour chart. We're not looking at the 4-hour chart. We're looking at the 1-day chart, slightly longer, right? Then we look at technical analysis, right? There's a very nice overlap support over here, right? I explained you guys in technical analysis 101 last week, right? We will be explaining more technical terms moving forward. There's a strong descending channel over here. It looks like price was breaking it. And if you use Fibonacci correctly, the key target that you're looking for is over here. So we are forecasting for prices to drop down. But this is from a technical perspective, right? This was from a technical perspective. We then looked at from a fundamental perspective, right? So this was what I said, right? I think regardless whether Donald Trump or Biden wins, right? Both regiments will be China exchange rate hawks, and they'll insist that exchange rate adjusts to reflect bilateral trade balances. I know it sounds a little bit confusing, but the People Bank of China is going to have much more potent stance to yuan appreciation as the country has reduced its reliance on exports. A few things you want to take note: as long as there's no further US-China tension, we could see the yuan strengthening. See, this is the part here. We could see the yuan strengthening, and of course, with my little bit of bias that the dollar is going to weaken, we can expect the dollar CNH to drop to 6.40 level. You can see this was where we forecasted it, right? And of course, it went all the way down to 6.40, right? From October, right, to February. How many months is that? That's 4 months, right? So think about it, right? This is 4 months, right? So that is how, if you're a long-term trader, if you don't have that much time to trade, you don't take long-term positions, you need to know your fundamentals. You need to know the big picture. You need to read, and you have a bias, right? It's like, does it make sense, that the yuan will continue to weaken? We expect it to strengthen. Hence, dollar CNH should be dropping. This can also be applied to indices. We are calling the move for indices, right? Same thing over here. Let me just draw it out for you guys. Same thing over here. We got a very, very nice overlap support over here. Price was bouncing once, react off this level, bounce off, and it's going to bounce off again. We did a whole bunch of Fibonacci. It looks slightly hard to see, but there's a whole bunch of Fibonacci. We are forecasting for prices to kind of go up from here, right? To kind of go up from there. Okay. Now, this was a technical perspective that price is going to go up. How did we combine fundamental analysis with this, right? Very simple. Regardless of a Biden or Trump victory, we expect the stock market to continue to do well. Recent jitters we're seeing has more to do with uncertainty than the long-term outlook of the market. Our fundamental bias is that we could see SPX continue to rise. This lines up with the support we're seeing on SPX. Now, how does it look like? Oh, shucks. Did I seem to have lost the chart there. Yeah, minor problem. This is from November. Let me just see if I can pull out the chart. Right, I don't have. Oh yes, here. This is the SPX forecast. Right, you can see how price touched this level. We forecasted it touch this level and go all the way up, and it has done that. Perfect combination of fundamentals and technicals. Okay, remember it's a long-term trade, right? We are using the 1-day chart, and if, of course, IronFX, we offer equity trading. You can also use it for Tesla. Right? No, I mean for equities, right? In our case, we are using Elliott wave theory. I'm not sure how many of you guys here know Elliott wave theory, but it's a pretty good it's pretty good to use, but it's not easy, right? We're looking at long-term wave 1, 2, 3, A, B, C, D, E, 4, wave 5 projection. So everyone was saying that with Biden potentially winning, right, they're going to expect prices to go down, but we were forecasting for prices to go up even up to here, right? So how did that work out, right? If you apply a little bit of fundamentals, this was our view on it. From a fundamental perspective, we expect Biden win to be a good sign for Tesla, because he's very pro, he's pro green, basically ECG. They like the green technology, right? So from a technical perspective, right, Tesla was within a triangle configuration, Elliott wave theory. We expect prices to go up. With both fundamentals and technicals lining up, we made the bull call for Tesla to rise up to 600 at a time when everyone was saying it has reached its peak, right? What has happened since then? This was when we called the move and it went all the way up. That's how you use fundamentals along with technicals when it comes to trading. Okay, this is how you use fundamentals along with technicals to call these moves. Now, right, you will require a little bit of guidance when it comes to trading. This is where I am glad to announce to you guys that we're just launching the VIP room. I'm going to show you guys how to get access, right? It's because we're just launching it, you're going to have, it's going to be slightly quieter, right? I got my team in there. We can answer questions along the way, but we'll slowly be increasing the amount of analysis we put in there. A lot of good setups, a lot of good trades for you to look at. All right. So this is the part where I'm showing you how to get access to it. Okay. In the room, in the VIP room, you'll be able to get direct access to me. You'll be able to get direct access to my other prop traders. And that is a place where you can practice your analysis. Now, let me just show you how to get access to that. All right. You have this place, vip.inrfx.com. Okay. You want to go to this link over here. Actually, do I have a, yeah, I might have it over here. So when you go into here, right, you go into here, this is how it looks like for someone who's joining for the first time. You'll notice that on the right side, right? You notice that on the right side, there's nothing, right? There are no words by the right side. There are no channels. What you want to do is you click on this thing called request access, right? Now, as long as you have an IronFX account, if you have a live account, you have access to all FX. If you have a silver account, meaning that you have more than $1,000 with IronFX, you get access to commodities. If you have more than $10,000, you get access to indices and you get to direct message the prop traders that we have, really profitable traders, right? And then if you have more than 50,000 or 100,000 in your account, you get to direct message me, the chief trader, right? So what you're gonna do is click on this thing called request access, and they're gonna ask you to attach proof of your IronFX account to get access. You want to click on this, request to join access. Please see my screenshot, right? This, for example, and click upload file. So in this case, we're going to upload something, right? I'm just going to upload something super simple. Maybe I'm going to upload this, right? Bam, there we go. Of course, what you want to do is you want to upload a screenshot of your account, okay, an IronFX account. Okay, once you're done, it shows that your request is pending approval. Now, how it looks like for me over here, right, is that I will notice that someone has sent in a request, right? We got our friend AABBCC over here. Please see my screenshot. Clicking on this, all right, this is a nice screenshot of your account, having IronFX account. I'm going to accept the request. I'm going to give you a gold tier, right? So when that is done, I'm going to come back to here, right? And you see my account over here. I suddenly have access to all these different charts, all these different analysis by the side. I'm going to show you how you can use this in your trading to be a better trader. This is the part where you can ask us questions, right? Let's just say you're looking at this 1 hour chart on pound dollar and you're wondering, right? You want to draw this line over here and you say, okay, hey, Ed mentioned, hey, Desmond, right? Do you think this might be a trend line breakout? Right? What is a trend line breakout? So this is a handy little part, right? You can highlight the text over here. You can click this button called link object to text. And then you can click whatever you just drew on the chart, right? You just click on this little trend line over here. You notice it lights up. You send this message through, confirm, and you send it through. So I can see that you have asked this question over here. Let me show you how it looks like from my side, right? From my side, I'm over here. Right, I can see, hey, Desmond, do you think this is a trend line breakout? When I hover my mouse over here, you can see it lights up. So I know exactly what you're asking. I know exactly this is the thing. Of course, if I think it's great, I give you a nice little thumbs up over there, right? Good stuff. I'm going to view the discussion and I can say, hey, AABBCC, right? It does look like a nice trend line breakout. Okay, I can just comment over here and give you a feedback, right? And then of course over here you can see, all right, Desmond has just replied to you. Yeah, it looks like a nice trend line breakout. You can keep track of all the analysis over here. Okay, so that's the important thing when it comes to using this room. You use it to ask questions. Technical analysis, fundamental analysis, you can come in here, all the different rooms by the side, you can just come in and you can ask any questions you want, right? You can talk about markets, you can talk to us. You know, we're looking to slowly but surely build a nice little community of traders, right? I'm going to send the link to you guys, right? What is the link that you want to go to? You want to go to this link over here. Yep. VIP.ironfx.com, right, /app, right? So you want to go in, you want to register for a brand new account, right? Register for a brand new account. When you're in there, you know, just need to attach proof of your IronFX account and we'll get you access to it. Okay, I will approve it and I will slowly get my team to come in here. You will be the OG group, right? OG group meaning that, you know, you'll be the first few bunch of people who are coming in here, right? And it'll be nice to grow the community together, right? And of course, we have this little thing here where, let me just put it out over here. Sorry, you know, we have this little thing over here where I can't find it. Yeah, we have different little XP and stuff, right? So the more you participate, the higher level you rise. You know, you send messages, you know, you reply to people, you create analysis comments and stuff, you know, you rise up the ranks. You know, you rise up the ranks, you know, different levels. And most importantly is that we're going to give you different prizes along the way. You know, the higher you rise up the rank, you can see this little XP bar at the top, right? We're going to give you some exclusive indicators that cost anywhere from $150 to $350 per indicator, right? We've got some exclusive indicators to give you in there once we implement that. All right. So yeah, guys, I hope you found this session useful, right? If I can see some questions coming in, right? Lawrence is asking, right, apart from the 1 to 5 minute spikes, what happens when I answer live, right? Yeah, so apart from the 1 to 5 minute spikes we see immediately after news releases, does news change direction of the market? Yes, it does change direction of the market quite a bit, right? The 1 to 5 minutes, yes, a lot of volatility there, but it does change the direction of the market, right? Suddenly, usually, if it's a big enough news event. If it's a tiny news event, right? If it's just like one of those medium impact news or low impact news events that don't affect it that much, it doesn't change. Imagine, right, like the non-farm payroll results, suddenly it's a big news event, right? And like we're seeing unemployment numbers like we've never seen before, right? It causes the market to shake up a lot. That is then, right, there's a first initial volatility, but not everyone is trading the market at that point in time. Soon, when more and more people wake up throughout the day, you know, they're going to look at it and like, oh man, unemployment is terrible. I need to slow down my spending, right? I need to save a little bit more money, right? The companies start looking at it, right? And they're like, oh, wow, man, the economy is not doing that great. Then they start to affect the economy, right? So yes, a big enough news event is going to cause a lot of volatility. There's going to be a lot of movement, but it then will slowly also affect the rest of the market. Right? Don't expect the market to go crazy in one direction, right? Usually is how the rest of them play it out along the way. You know, some will say, actually, unemployment is not that bad. You know, it's only because of COVID during this point of time, we're going to recover from it, right? You need to see how it plays on after that. But yes, usually after there's a spike, if the news announcement is big enough, that's where you can really start moving the market a lot more. Okay? All right, guys. So I hope you found this session useful. I want to encourage you guys to go to this part here, IronFX School webinars, right? So webinars is the link that you want to go to, and we have a live trading session tomorrow, right? We have a live trading session tomorrow. Please register for it, right? I'm going to send this link to you guys over here, right? Please register for a live trading session tomorrow. It's either going to be me or Cassandra who's doing it, right? I think it might be Cassandra, right? So it's a pretty fun event, right? I think live trading session, I think this might have been done by her previous. Oh, no, this was me, right? Or could be technical analysis 101 that was done by her previously. Oh yeah, so yeah, Cassandra might be doing tomorrow's live market analysis, right? It's a pretty fun session. Right, pretty fun session where we look at the markets, we trade it together, we look out for some nice trades, and if it works out well, you know, everything is recorded here for you guys, so there's no running away from it when we do these live trading sessions. Okay, Now, please sign up for it tomorrow, for our webinar tomorrow, live trading session, right? Otherwise, if there's no other questions, thank you so much, right? Thank you so much for staying through this entire webinar, right? Staying through this entire webinar, watching it, right? It's great to see a couple of familiar faces, right? Familiar names, right? I hope you found this session useful, right? I'll see you again next week as we dive into more different topics. Otherwise, it's either me or Cassandra is going to catch you tomorrow for our live market analysis. Okay. Thank you very much, guys. Stay safe, trade safe, and peace out, guys. Right. Lawrence, the video will be on YouTube, right? Video will be on YouTube. Thank you, Arthur, for staying true. Right. Where's the YouTube? Sorry, I need to send the link to you guys again. This is the YouTube, right, Lawrence? This is the oh, sorry, not this. Yeah, is that, did I paste the correct link? I need to copy this, right? Yeah, this is the link that you can go to. It contains all the different webinars that we have, right? So go check it out, right? This one should be uploaded there soon. Okay. Thank you very much, guys. Stay safe, trade safe, and take care. Bye-bye.